The Federal Reserve is standing firm that the U.S. inflation will fade back to pre-pandemic lows in the next year or so. One important detail to note, though, is that they define high inflation as 5%. I personally think inflation is north of 10%. So if and when they say it's low, it will still most likely be high, and that can only mean one thing: record high unemployment and poverty levels. The most immediate threat from high inflation is the loss of purchasing power. Prices are now rising faster than wages and making it harder for families to meet their needs, especially those on lower incomes. If inflation remains high, the Fed could also be forced to raise interest rates sooner than it planned and risk upsetting a strong economic recovery. In a worst-case scenario, consumers and businesses could come to expect steadily increasing prices and make it a self-fulfilling prophecy, such as a broad shift in attitude after a few decades of remarkably stable inflation could make it harder for the Fed to manage the economy in the long run. Once people start to expect inflation to be higher, they change their behavior in ways that make it harder for it to get inflation back under control. However, many economists believe that regardless of people's sentiments, it isn't impossible for inflation to go down considerably by next year. The problem, and I believe this, has become too widespread. Price increases have spread to a broad array of businesses' supplies, and it's filtered through the broader economy. Companies are increasingly trying to recoup their costs by charging customers more for their products and services. Then there are shortages and production bottlenecks. These shortages aren't just because the demand is high, it's also a multi-layer system. On the one hand, it's hard to find workers. People were forced to adjust their lifestyle to the limitations of pandemic, socially, professionally, and personally. When people found out, they found less and less reasons to go back to work. The result, lots of jobs and no one interested to take them. There's also a shortage of raw materials. From gold to silver, lumber, none are getting mined in the way that it needs to be. All this results in higher wages. Average hourly pay has risen at 4.2% over the past year. Companies have to pay more to retain current employees or to attract new ones, especially at businesses like restaurants where workers are more reluctant to deal face-to-face with customers like they once did. All these factors raise the question of whether inflation will fall as quickly as the Fed predicted. The Fed itself predicts inflation will drop to 2.2% in 2022. Many economists think that the inflation will rise even further, and it's not going to fall. The Fed's plan to raise interest rates could choke off the U.S. economy growth and send stock markets plummeting. What can make the economy even worse is if consumers and businesses lose faith in the Fed's ability to keep inflation low. Such an outcome could make the U.S. economy more unstable and prone to sharper ups and downs. So don't rely on cash savings, don't rely on the promises of an improving economy, rely on what you can control, your own investments. Start investing and design it so that you're inflation proof. So far, billionaires and central banks invest in gold and silver to protect nations against uncontrollable economic downturn. If it's good enough for billionaires and countries, it should be good enough for you. And if you want to learn more about investing in gold and other precious metals, we're here for you. Give us a call at 877-646-5347 for a no-pressure consultation, or check out our website at noblegoldinvestments.com.
If you're interested in investing in precious metals and you want to talk to a no-hassle representative that has experience in physical metal, give us a call. Phone number is 877-646-5347. Our phone lines are always open, and we're happy to answer any of your questions.